the Big Money Podcast. It's your window into outlier stocks and what really moves markets. Don't follow the news, follow the big money.
1, 2, 3, 4, 5, 6. We are ready to begin the Big Money Podcast. I am Luke Downey. I am with the esteemed, the great Jason Bodner.
Always esteemed.
Always esteemed. You're a great guy. You're an amazing friend. And more importantly, you're going to help us today because we are in some interesting times with not only the market, but certainly the big money index. It's doing some really crazy stuff. And I think before we kick into that, I want to remind people to make sure to like and subscribe to our YouTube channel because we need that. And we want to make this as fun and interactive as possible. So with that out of the way, I think a lot of people are probably wondering what in the world is going on with the markets. Had a big sell-off day yesterday. Is our data saying that the world is ending, my friend Jason?
Honestly, this is like where the pilot comes over the intercoms like, ladies and gentlemen, please buckle your seatbelts and return their tray tables to their upright positions. We're about to experience some turbulence. And that's after you go, whoom. What was that?
Yeah.
I do not think it's the end of the world. What did we see yesterday? This is a perfect opportunity, right? You called me. You're like, I'm seeing stuff in the data. This is the first time we've seen significant selling. I'm anticipating the big money index to sort of roll off. It could not. You kind of got a little spooked there.
Got a little spooked. I saw on the screens. I focused on the screens. I was like, I think there's going to be a lot of selling in the data today. And we're talking about Tuesday. Go on.
May 4th. That's right. And we talked through it. And even despite a NASDAQ that was down as low as almost 3%, I think intraday, we decided, let's stay the course. We believe in our data. It's gone back 30 years. It's been through, the worst you can think of in the last 30 years. So yeah. I think one day of, maybe uncomfortable selling, we can sort of sift through and look at what the data says the next day. And what did we find, Luke? Can
I share the screen now? Because
sharing is caring. So
listen, I got up early this morning, as I do every morning.
For you? Anyway.
Normally with a 4 handle. And I'm looking over the data and I got my screen up here. I can't believe it, but the big money index actually increased on a day yesterday. We'll go into why that is.
Yeah.
But
so
yep, go ahead.
That's perfect. And we were talking about it and we're like, yeah, we could wait. And I'm like, listen, let's wait to see what the data brings because listen, it's not like a live and die by the big money index, but I can't really think of an indicator that I rely on more when it comes to timing markets. So we would have anticipated it possibly to go lower with all of that selling, but lo and behold, we woke up and like Luke said, the big money index went up. And why was that? That's because I was sifting through all the results, the signals of our, data collection. I noticed a lot of buying and also a lot of selling.
So
what did I see? I saw a bunch of.
So yesterday, these are the ETF buys and sells. And by the way, if you're just listening to this audio or whatever, so the BMI, right? Last time we got here, I think we said something a couple of weeks ago that the big money index was going to be going higher. That was what we anticipated. And it has been. Now, it's been a choppy session for some of the markets, some stocks, some sectors and things like that. But generally, what we're trying to do is predict which way the big money index is going because typically it leads the market. So markets are at all-time highs. We are almost kissing overbought. And we can go into that in a few. But like you were saying, what we noticed this morning was, there was some selling. And I have some stats here. Jason, you're a statistician.
I like numbers.
Yesterday, let me close something real quick so I'm not getting pings and stuff like that. yesterday we had the largest volume, it's the largest trading day in 6 weeks. Okay. So that was
And
yesterday.
6 weeks ago puts us right around March, right?
Yes.
Mid-March when things were getting really choppy.
Yep.
Right.
And not only that, but also yesterday was the biggest sell day. So the biggest one day of sell signals in 8 weeks. So basically 2 months. But on the flip side, it was also the biggest buy day in 7 weeks. So, I mean, this is rotation station, my friend.
Yeah, exactly. So when I woke up long after you did, admittedly, I was looking at our stocks. And what did I see? I saw a bunch of sell signals in software stocks, some great software stocks, but mostly
Wonderful stocks.
less optimal software stocks. I saw
Yep.
a bunch of buying in financials, industrials, materials. I saw buying in ETFs that had names like S&P dividend performers, dividend value.
What they didn't want last year, they want now.
Right. So it is a rotation. And even though the overall market was volatile and things were choppy, there is still money. It's money just sort of sloshing around from one side to the other. Right.
Yeah.
So yesterday they didn't like growth. They like reopen. They like value. They don't like stay at home. We saw this in November. It can get uncomfortable for some of the heavy growth stuff. But what did you tell me this morning? All of a sudden, like a switch, they can love growth again, right?
Yep. And I think I'm going to share some more charts real quick, because that's the thing that people got to realize is if the narrative and the story is, oh, they don't want growth and they want reopen and they want industrials and they want financials, ladies and gentlemen, let me tell you, that narrative can change on a dime. And so just to kind of go over what we saw in the data, this chart right here that's in front of you, this is detailing how many stocks, the number of stocks that traded on outsized volumes, outsized trade activity. And I have it circled here. You might not be able to see it, but it's this little guy right here. So that is
the golden bar.
The golden bar. It's almost, the golden nugget. It basically stuck out to me. I knew it was going to be a big volume day because I could see a lot of the stuff trading yesterday, but that's the biggest stick that we've had in 6 weeks. And then if we come back, remember our narrative in the blog post, mapsignals.com, we've been talking about earnings season, expect some buyers, and there is buyers, but there's also some sellers. So I'm going to try and zoom in a little bit so you guys can see this, but these are some of those growthy names right there, that little red bar. So again, it was one of those days, big rotation days. There's a big green stick. It's the biggest green stick in 2 months. And then there's a big red stick. It's the biggest red stick.
It's like silly putty stretching,
That's what it is. I think, as we approach overbought, and there's a good chance we'll be overbought tomorrow when we send out our blog post, or it'll happen in a couple of days, right? What do we always do? First step of whenever we start putting the alarm bells is get overbought and then watch the data start to deteriorate. So that BMI typically will start falling before the markets start to fall. And we've seen that multiple times, whether it was different rotations that were happening earlier this year. The same thing is what we'll be looking at today. So if you're a subscriber, I'll go ahead and put that out there. You can now follow the BMI in real time every day. It auto updates early in the morning. And so we're not alarmed yet, but eventually it will be.
Well, here's the key, right? Because for all of you out there, when the market goes overbought, when the BMI goes overbought, you might be thinking initial instinct, oh my God, I got to start selling my performers and getting out of the market. But we have seen time and time again where the big money index can go overbought and stay overbought for a long time. Now, this is contra to when it goes oversold. Typically, when it goes oversold, doesn't stay that way very long. It's death and despair, and everybody's throwing out the baby with the bathwater, and they can't get out of their risk fast enough. And the next thing you know, there are no sellers left and it's off to the races. And we have lots of data to back that up. But when it goes overbought, the environment, it could be a multitude of reasons things going bought. They're buying everything. They're buying ETFs. They're only buying some sectors. They're selling others. It drifts higher. It might take weeks. We had an instance last year after the pandemic where the big money index was overbought for 84 trading days. That was like 4 months. Do I think that's going to happen here? No. But once we do go overbought, what Luke is saying is you got to focus on when that line starts to fall. When it starts to fall is really when we get our signal. Because if you get out now, you could miss out on the bonus round, which we detailed in a blog post a long time ago. When you're playing that Super Mario Brothers, and when I was a kid, and you get to the bonus level and you go in the room and you get to collect all the coins and get ready for the boss level. Sometimes that happens with stocks. Will it happen this time? I don't know. We're seeing a lot of buying in value, like we said, reopen, and a little selling and growth. And before we move on to the next concept, I just want to give you the backdrop. Okay, so the data is clear. Even though the market's under pressure, big money index is going higher because there's some buying. That's clear. What else is clear is they're buying ETFs more than they're selling ETFs. There is a rotation going on. It is not an exodus of capital. It's a repositioning of capital. So if we look at the backdrop, everybody, we are in the midst of the best earnings season of our lifetime.
So good. It's so good. Yeah.
60% of the S&P 500 stocks have reported earnings already, and 86% of those have beat earnings and sales estimates, and the average earnings beat is 23.8%.
Hallelujah.
So it's sort of like, what more do you want, people? You're not going to get better earnings than this. And as a matter of fact, I was listening to one money manager who expected Q1 to be the earnings peak, and it looks like Q2 is eclipsing that in terms of peak earnings momentum. So the backdrop for companies making money is great. So let's just talk about what we talked about on Sunday real quick. Everybody's worried about a PE ratio that's really high for the S&P 500. Well, let me clue you in on something. If prices aren't going down in the S&P, they continue to go up or stay flat, and earnings is coming up, PE ratios go down. So what we're seeing is earnings are rising to meet prices, not prices falling to meet earnings. Then lastly, I live in Florida, Luke, you know that. Yesterday, Governor Ron DeSantis, right or wrong, whether you agree with this or not, he sent out an executive order saying, off with the masks, no more COVID in Florida. I'm removing all COVID restrictions, right? Some people think it's crazy, it's too early. It doesn't matter. The point is, this is the first state out of many that are officially going to be removing the COVID restrictions over the coming months. Biden's saying he wants 100 million adults totally vaccinated. We have 50, I think last count was like 60% of Americans have received at least one shot, adults. My 16-year-old kid got his first shot. We're rolling out vaccines. We're reopening. The economy's rebooting.
It sounds positive to me.
To me, it's all a positive backdrop. So if we do experience a market pullback, I really believe it's momentary because earnings are great. PE ratio in the S&P is going to come down. Companies are lights out, and we haven't even reopened yet. And we're hurtling towards that direction. There's tons of pent up demand. I think the real thing we got to keep an eye on is inflation, right? You're seeing it. You're dealing with a flooded apartment, and all of a sudden you're getting price quotes that go through the roof.
Good Lord.
So I guess wrapping up this big, long-winded departure here, the point is the data is pointing higher. The backdrop is very positive. And until that data deteriorates, I don't really want to deviate from the plan of holding great outlier stocks just because the market sees a bit of chop and turbulence. So that's
Honestly,
sort of how I see it.
I think you said it. I think you said it best. I think you said that there's a lot of things that can deter us from what we're trying to do. Ultimately, we want to make money with stocks, right? And so how do you make money with stocks? Well, you gotta stay in them, right? And you gotta try
Which
and
stocks?
the good stocks, the outlier stocks. And I mean, like someone once, you remember we went to a meeting together, or I think it was with you and me, and somebody was talking about, ducks, and so the market's going to do what it's going to do. And then they had mama duck, and then they had the little baby ducks.
You were like, I love that.
Oh, I loved it. I mean, I speak duck, you know what I mean? And so the whole point was don't focus on where the baby ducks are going, because eventually they're all going to follow mama duck. And right now the data is mama duck, and it's saying on balance, things are getting better. The BMI is getting stronger, right?
Right.
So there might be some stocks that are going lower, but there's certainly a lot of stocks that are going higher. I can see them in our accounts, my personal accounts. There's a lot of like dividend growth names, big time, dividend investor. And so while the portfolio, the dividend portfolio was kind of sagging, I would say lagging. It didn't do bad, but it didn't do what growth did last year. Now it's off to the races. And so that's why it's good to have this like barbell approach. Some outliers are dividend growth. Some outliers are just tech. Some outliers are just growth. You got to be able to balance all of that out.
Yeah, but I think you bring up a great point, right? I was imagining me watching this podcast out there. Yeah, some stocks are going up and some stocks are going down. Thanks for telling me the BMI is going up, but my stocks are going down. I mean, what do you have to say about that? And I imagine if I'm you out there and I'm holding some of these great outliers that Map Signals has been talking about for a long time that have had massive performance, all of a sudden, some of them are getting cut off at the knees. I believe it's temporary, by the way. What soothing words can we say to them? And I think a great way to do that is to look at a outlier of the past and how it reacted to various BMI readings going on then. So, I think you collected some data on that, but, a nice segue here is outlier stocks go up over the long run. Those looking for quick swing trades, it's a hard business for me. I was never very good at it. What I found was I was good at identifying the winners over the long run. And that's what you're talking about. You got to stay in. So
you got to stay in the good ones,
stay in the good ones.
And I've got a good one that I think we could pull up on the screen if we're ready to go into that. So this could be our outlier stock.
Yeah. And then we should wrap it up, because
then we should probably wrap it up.
On the time, right? We want to keep people happy.
What my mother used to tell me all the time, Jason? She used to say that
you're the most handsome young man in the entire world.
She said I was the brightest, and she would call me son. But she used to tell me, she was a religious lady.
Wow.
And she used to say that all are called, but few are chosen. I think the same thing rings true with stocks. Okay. All are called in February, right? All of them are called up. All of them are going up. Everything, the SPACs, the bad stocks, the good stocks, everything.
Right.
But only the few are going to continue to go up over time. And the outlier that we have today is Facebook. Facebook is just such a dominant name. They just print money. And over here on the left side, can't wait till we have hover over charts, but it had some pain here. Okay, this is a 1-year chart, but there's a lot more green than red. But if you step back, and this is what we're trying to show people, here's how you make money. You get a great company and you hold it over years. And so the chart of Facebook from 2013 all the way to now is juice, is what it is. It's money.
I mean, look at that entry from the first time it was on our top 20 report. I'm guessing it was around $48, $49 way back in the back test days.
Yep.
And then even in the live data days, we're looking at about $80. And now it's, north of 330, wherever it is.
Yeah.
That is how you make money. And look,
Big
we
money.
sustained drawdowns. You sustained a big money index falling, a
Yep.
big money index rising.
Growth scare right here. You remember whenever growth, at the tail end of 2018.
Yeah.
And then you had the pandemic.
Yeah.
But what happens when the sellers get out of the way, when the bear suits come off? The big money managers, they flock to the great stocks,
to quality,
the chosen.
And what is quality, right? Growing sales, growing earnings, thick profit margins, unique standalone in their business.
Yep.
I mean, that is why many are called and few are chosen, because there are only a handful of businesses out there that execute on this level. And when we get big money buying those, we only get a few every week to look at. And that is how we combat market volatility in the long run, is kind of sitting with it. You look at people like Warren Buffett and Charlie Munger.
Love them.
We imagine ourselves as 90-year-old men looking back, never sold. I know that's hard for many people to do. But when you focus all your time and energy finding the best ones and you grab a hold onto it, don't let it go. Don't get scared out of your stocks for the news of the day,
I think that's true. And I feel like if there ever was going to be the greatest investor on planet Earth, if we could ever just visualize who would that be, it's probably the person that held. It's probably not the guy that's going in and out, or the girl who's, just, swinging it around all day long. If you could say who is likely the greatest investor of all time, it's probably someone who just bought great assets, great stocks, and just held them and held them and held them. And then they look like a genius. That's the thing. You don't have to be a genius, but you'll look like a damn genius in the end. So
it's the easy genius. And you just described people in and out. Those are traders. Nothing wrong with trading. I'm not a great trader, but investing, saying, how many people wish they bought Nike in the 80s, like 1980s?
Yeah.
Yeah.
That's
a long time ago, 40 years, but imagine the money you would have made versus buying, selling, trying to clip, losing, winning.
But who would have held that? Which, by the way, this is just on another note. Somebody reached out to me years ago, and they basically said that they had a big short position in Nike. And they were like, "Why are you so bullish?" And shouldn't even have, gotten into it with the guy. But I mean, if you're going to personally email me and tell me why, and then tell me that you have this huge short position, I don't know where he is today, but God
might be shorter.
Say prayers for people who actually act on that type of, bearish stuff, because you go around selling these great stocks and shorting them. Oh my God.
So where are we? We are a little market shop.
Yep.
Pilot said, buckle your seatbelt, keep, stay out of the aisles for a little bit.
Yep.
The big money index is rising. Not all sectors are rising. We're experiencing some pain in some growth names. It might persist. It might be temporary. Yesterday was also the first day of May trading. Sell in May, go away.
The second
Believe it or not,
day.
it's a real thing.
Yep.
Oh yeah, you're right. That was the second day. I got my days.
Either way, it's the beginning of May.
It's the beginning of May. So, but focus on the outliers, and sometimes it rains and you got to weather the storm. Do we have any sort of reader things that you wanted to address? I think you mentioned that.
Yeah, no. Well, a couple of people, there's two questions that stuck out to me earlier this week. And someone asked about, so apparently there's a lot of people that are worried about a market pullback. Okay. I'm seeing a lot of people reach out. What do I do? And all that type of stuff. When is the market going to pull back? The first thing I want to say is pay attention to our data. Use that as part of your analysis. People have all the ways that they look at the market, but if the big money is saying that money's coming out, pay attention to that. Look at the big money index, etc. The other thing is on our map view pick, so our weekly stock pick, we have this trailing stop loss. It's a closing trailing stop loss. A couple people reached out asking, what does that mean? And basically what that means is, let's say you enter into a stock, it's at $100 and it has an $8 trailing stop loss. If the stock, so if you buy it at 100, if the stock closes $8 below that, 92 would be, you'd be triggering that stop loss. You would effectively get out if that's how you want to manage your risk. But if the stock goes from 100 to 125, then you would use that higher level. You'd be at 117. So it'd be 125 minus 8. That would be your new stop loss. And so that allows you to ultimately play with house money, right? So you just wait for the stock to close below that level. So I thought that was a great question. There's a little confusion. What does a trailing stop loss mean and how can it help you? So
nice. So let me weigh in on both of those just a little bit. The trailing stop loss is geared more towards traders, those people who really tightly watch their risk, and that's based on all sorts of assumptions. Volatility, we're trying to combine sort of an expected range, and if it falls outside that range, then it sort of triggers that level. So that's how we calculate that. And answering the first question, second, people worried about a market crash and all that stuff. There's a lot of news, a lot of things going on. We talked in detail in our map view on Sunday about the Biden tax proposal and how that's rattling a lot of nerves and getting people all scared. I went ahead and I looked at a study done by Fidelity. I quoted it, in which every year going back to 1950, that there was a tax increase. There were 13 times, 12 out of the 13 times stocks rose the year before and the year during a tax hike. And 100% of the time there was a corporate tax rise, stocks rose. So it might not give you the devastating effect that you're thinking bullish. It will.
Yeah, you're telling me the media might be wrong, is what you're saying. Who says that?
I would never say that.
I mean, this guy goes and looks up history and says the media might be wrong. My God.
I actually look at the facts. Sue me. Anyway,
yep.
In the words of Forrest Gump, that's all I have to say about that.
Listen, that's all you need to say. So that was it. There was also some questions. A guy reached out, and he tends to reach out quite often, but he looks at a lot of the stocks that we hold. So basically, if a stock comes on our research and we highlight it or something of that nature, we have to disclose. He was wondering why we didn't own certain ones, even though we know that they're outliers. And the answer is, I guess we just haven't bought it.
Either we haven't bought it, or you can't own them all, or it's we own a lot of stocks. I would say between the two of us, we're probably north of 60 stocks that we own.
I'd buy that. Yeah, over 100, I would say.
So odds are stronger that we own it than we don't. Let's put it that way. But
that's true. We own some non-outliers too.
Yes. Some thought they would be outliers, but here's the end result is we just invented a process that screens and picks for outlier stocks, and we want to bring them to everybody's attention week after week. Can't own all of them. Maybe one day we can, but for right now, we just happy bringing them to you.
There you go. And I think that's it. So look, we might be overbought tomorrow. We might be overbought the next day. Let's just wait till the data confirms that the trend is actually shifting, right? That sellers are actually here. They're taking over. And that's it, my man. Live your life.
Live your life. Enjoy. Time to prosper. Be happy. Earnings are killing it. We're reopening. Let's be happy, people. That's what I say.
There you go. And with that, let's end it, my man.
Sayonara. Talk to you next time.
Adios. Bye.
Thanks for tuning in. And please remember, this broadcast is intended for entertainment purposes only. Investments can carry substantial risks. Before you make a financial decision, you should first consult your financial advisor.